Good morning, good afternoon, and good evening, depending on where you're seeing this video from. I welcome you all back to Trade with KHFS Academy, and today we'll be talking about chart reversal pattern. And before we go on, please do well to like, share, and also subscribe so that you'll be able to get our video whenever we post. So, like I said, we will be discussing about chart reversal pattern. A chart reversal pattern is a price formation that shows the market is likely about to change direction. This means an uptrend may turn into downtrend, or a downtrend may turn into an uptrend. I'm just trying to say, when market is buying, and all of a sudden the market began to sell and turn to downtrend, or when market is selling and all of a sudden market began to buy or move to the upside. So chart reversal pattern is a formation. Whenever you see them, you will be like, okay, this market want to reverse to the opposite direction. If that market was a bullish market and you see chart reversal pattern, that tells you that this market is about to start selling. It will no longer be a bullish move or a bullish market. Sellers are already coming into the market. That is when you start seeing a chart reversal pattern. A major reversal pattern every trader must know. Number one, we have head and shoulder. Just like you are seeing on my screen here, we have head and shoulder. This is a shoulder, this is head, this is a shoulder, this is a neckline. Now, mind you, when market is buying, normally, just like price action, markets always move by trend. If market is trending up or trending down, markets always move by chart pattern. So now, if market is buying lower high, higher lows, lower high. Now, and you began to see something different from market, something different from market trending up. Market began to form something different. That is when you will tell yourself that it's time for me to lock up. It's time for me to chill and what to see the formation that this market is about to form. And mind you, like I used to tell you guys, you don't tell market what to do. Market tells you what to do. Market tells you when to sell. Market tells you when to buy. You don't just come into open your laptop and come into trading view and feel like, okay, for the fact I'm seeing charts, I'm watching charts, seeing candlestick, I just want to buy, I just want to sell. So if market is buying and you stop seeing lower high, higher lows, lower high, higher lows, you should expect lower highs again. And you began to see something different from normal market trend. It's time for you to, that will tell you that it's time for you to chill. This market seems like this market is about to do something. And mind you, whenever market gives you a head and shoulder like this is a shoulder, this is a head, this is a shoulder. Whenever market gives you a head and shoulder like this, it's not a criteria for you to start selling immediately. There's what we call neckline. That neckline is also a resistant level to the downside. Market might decide to get to this place. Market might decide to get to this neckline. You will see something like this. You will see something like ranging for some time, and the market will continue to the upside. So for a more confirmation, you should always expect a breakout of this resistant level. A breakout of this resistant level first before you consider anything. When you see a breakout, you wait for a test to that neckline. This is where you start looking for your entries. If you wait for that retest, this is a confirmation that says, yo, it's time for me to start selling, because the neckline formation has done its thing. It has taken out the head and shoulder formation has done its thing, and it has taken out the neckline, break out of neckline, retest to that neckline. So whatever thing that happens here, this is where you should start looking for your entry. It's either you start seeing candlestick rejections here, or you start seeing candle stick rejections here, or you see chart patterns here that will tell you, okay, it's time for me to start selling. So you always need to pay attention. You always need to pay attention with all these things. That is when patience comes in. Now, number 2, we have inverse head and shoulder. That's a reverse case of this head and shoulder. It's called inverse head and shoulder. Inverse head and shoulder. This is the opposite of the normal head and shoulder, the one I just explained. Opposite of the normal head and shoulder. It appears after a downtrend and signal is possible bullish move. So this is the inverse head and shoulder. This is the shoulder, this is the head, this is the shoulder. And market was selling, pull back, sold again, pull back, sold. Now we should have expected more push that is more lower than this previous low here, but it didn't give us that. That is when you should chill and watch the pattern that this market is about to form. And not just that, like I said earlier, when you see a chart reversal pattern, that is not a criteria for you to start selling or for you to start buying immediately. There must also be a neckline breakout. There must also be a resistant breakout, which is the neckline breakout. That you see something like this head and shoulder, the market might also decide to do something like this, to range a bit within this neckline and continue selling again. That is when you need to always be patient and wait for this neckline here to be taken out, which is breakout here. Not just that, if market breaks any resistant level, that is not also a criteria for you to start selling. That is not also much reason for you to start selling. You also need to wait for a pullback to that neckline. This is where you start looking for your entry. Let me type. This is where you start looking for your words, for your entry to the upside. This is an inverse head and shoulder chart reversal pattern. The opposite of head and shoulder is inverse head and shoulder chart reversal pattern. And number 3, we have double top. A bearish reversal pattern, double top. This is double top. This is the left top. This is the right top. Price touches a resistance level twice. This is the first one and this is the second one, and fail to break higher. That's fail to break higher above this level. That is why it formed a double top. Now, mind you, this is a double top, a reversal pattern, left top, right top. It failed to. Price tested this resistance level twice. It fails to break above this resistance level. That is why it gave us this double top. That is when you'll be like, okay, yeah, price couldn't break here. Remember, in every move, is all about a trend. Understand? Higher high, higher lows, higher highs. It should have given us higher high, but it couldn't break this resistance level, which it tested, that gave us double top. Now, what should you do? That is when you will calm down and give market some time for market to do its thing. And market came back again to break the neckline. Now, remember, market might decide to do this thing market can decide to do something like this. can decide to range for some time and continue to the upside. Markets can decide to do something like this and continue to the upside. So whenever you see double top, you should always wait. Allow market to do its thing between these bars first, because it has also given us a neckline. This is a neckline. It means this place would hold this market if you don't have strong sellers. It's going to hold this market if you don't have strong sellers. So it's going to dance inside this bus for a while before it breaks above or breaks below. So now, if market breaks above, you should also wait for something like this, which is a pullback. And if market couldn't break below and breaks above and breaks below, is not a criteria to start selling, because sometimes market might go inside, continue its move. So what you should do is wait for a pullback. And the market has pulled back is not also a criteria for you to start selling. Wait for some form of patterns here, some form of a candlestick pattern or also a chart pattern, because it can also give you double bottom here or a chart reversal pattern to tell you that okay, it's time for me to start running to the downside. You understand? So always give market time and room to do its thing. This is a neckline, breakout, retest, then you do what? Continue to the downside, which is very simple. So number 4, we have a double bottom, which is a reverse case of this double top. We have a double bottom. So this is a bullish reversal pattern, which is double bottom, which is double bottom, a reverse case of a double top. What do you see here? Market sold, get to this level, came back, and it couldn't break this resistance level. It couldn't break below. That is why the market went back and went to break the neckline. Always pay attention. After a breakout of neckline, is not a criteria that the market is okay for you to start buying. Always wait for a pullback to the neckline before you buy from here to the upside. You understand? So market sold from here, get to this point, it couldn't break here, came back, that's the first leg, came back, then came back to the resistance level again, it couldn't break above. It means that level is very, very significant as a resistance level, very strong one. So it went back to go and break the neckline. Automatically it has given you a reversal pattern to the upside. Chart reversal pattern, double bottom, because this left top, what did I write? Sorry, I just saw this now. Left bottom and right bottom. Right bottom. This is left bottom and right bottom. Both of them are equal. So it means this resistance level is very, very significant. And mind you, why I said you should always wait for a breakout before you start buying. Market might decide to range for a while inside this bus before it pushes to the downside. So always calm down and wait for a breakout of the neckline, pull back to the support zone. Every resistance turns to support zone after breakout, then rally to the upside. So always have that patience to wait. So this is a double bottom, a reversal pattern to the upside. And number 5, we have a triple top. The triple top is just like a double top, but this one now is 3. We have a triple top, it's just like a double top, but this one is just 3. Price tested the resistance level 3 times. It couldn't break out. This is the first one, this is the second one, and this is the third one. It couldn't break higher. Just like this, it couldn't break higher. So market now had to come back to come and break the neckline. And mind you, this neckline is also a resistance level that would hold this market from going to the upside. So this is a breakout. You should also expect pullback before you continue to the downside. Always pay attention. Please, always pay attention. The market broke any neckline is not a criteria that you should start selling immediately. If you don't want to put your emotions at risk, if you don't want to make yourself start feeling bad or make yourself start panicking, you should always have patience for Forex. Market will always tell you what to do. Charts will always tell you what to do. Charts will always tell you. You don't have to worry yourself. The only thing you need is just patience. You don't have to worry yourself. You don't even need to be scared of missing out. Fear of missing out. You don't need to be scared of that, because this market to trade is recycling. It comes and goes. All the pattern that you are seeing, it comes and goes. So whenever one pattern happens and maybe you miss out, just wait for another one. Just wait for another one. You don't have to stress yourself. You don't have to stress it, because it must definitely happen. But it's just time. So you don't always have to panic because you want to miss out, and by so doing, you end up entering a premature trade that you will later regret. And one thing a forex trader should always pay attention to, putting your emotions at risk, whatever thing you are doing. First thing first, you need to protect your emotions. You need to protect your emotions. In as much as you want to make money, you also don't want to lose money. So this is a triple top. Market tested this resistance level 3 times. This is the number 1, the middle one, and the third one came back. So always remember, allow market to pull back to that same neckline before you start selling. So this is your entry. This is where you should be looking for your entry. And also, mind you, the more reason why you always wait for that pullback is because of your stop loss. Because there's no way you will short a market from here and you come and put your stop loss here. It's not possible. So the more reason why you should always wait for a pullback is for you to be able to get a tiny stop loss. A tiny stop loss. You want to lose $10 and you'll be able to make like 100 or 80. This is where it happens. This is where it starts. For you to secure your money. So you always have to wait for a pullback here, because whenever you short from here, let's assume you short from here, your stop loss, though I'm going to make a video on entry and exit, your stop loss should be above here. So that is the more reason why you should pay attention in a pullback. Number 6, we have triple bottom. That's a reverse case of this triple top. We have triple bottom. That's a reverse case of this double bottom. And if you watch, price test support here 3 times. This is the first one, second one, third one, and it couldn't break below. It refused to break below, or something like this. So it means this support zone is very, very significant. The support zone is very strong. For price to come to test it, the first one came, the second one came, the third one, and it couldn't break. Now this is the neckline of this reversal pattern to the upside, and this neckline is also a significant level that might probably hold this market from buying to the upside. So what do you do? After these breakers, just wait for a pullback. After the pullback to the neckline, you buy from here. Now, this is your entry point. Like I always tell you people, I'm going to make a video over entry and exit though. This is your entry point. This is your entry point to the upside. So triple bottom, neckline, wait for pullback, entry point to the upside. An important thing you should know, which I keep telling you guys, never enter early. Never enter early. Always wait for a breakout, pullback, confirmation before you enter. Always wait for a breakout, pullback, confirmation before you enter. And always combine it with support and resistance, trend line. I'm going to make a video about trend line as well, candlestick pattern, and market structure. Because whatever thing that is happening, all these movements you are seeing, the fight between buyers and sellers are what makes out this market structure. So always combine it with support and resistance, trend line, candlestick pattern. That's a market structure. So this would be the end of this video. And please don't forget to like, share, and also subscribe, so that whenever we make a video or whenever we post a video, you will be able to get a notification over our video. See you guys on our next video.